my channel. Here we discuss everything that is forex price action. This video is the second in my beginner to mastery series, completely tailored for complete beginners. Today I'll be talking about pips, lot sizes, and pip value. If you're new to the forex market, I'm sure you've heard the word pip being thrown around. So what exactly is pips? I'm sure you've heard traders say, I'm going to catch some pips, I lost some pips. What exactly is a pip? A pip represents the smallest value change between two currencies and is usually the fourth decimal place of a price quote for most currency pairs. So for a pair like euro dollar, pound dollar, Australian dollar, New Zealand dollar, even the USD Swiss, the USD CAD, you'll find that the fourth decimal place of its price quote is what you ideally will call a pip. In this particular example, I have a price quote for euro dollar, which is 1.08737. This one has been given in 5 decimal places. The fourth decimal place of this particular price quote is what you call a pip. So in this example, for the bid and ask price, you have 3 and 4, where 4 is. So the fourth decimal place is what you call a pip. We do have exceptional cases where the pip will be the second decimal place, and this is for currency pairs that are quoted in 2 decimal places. And usually here you'll find it in the pairs like the USD Japan, the yen pairs. And to give you an example, here we have USD yen quoted as 146.293. So the second decimal place, which is 9 and also 1, that's what you ideally call a pip. If you noticed, for the USD yen, we can have it quoted as 2 decimal places or 3 decimal places. The third decimal place is what you call a pipette, and this is just a fractional pip, and it's the same as if you look at the euro dollar. When it is quoted in 5 decimal places, the 5th decimal place is what you call a pipette. I wouldn't encourage you to focus on it. Just for your journey in forex, focus on the 4th decimal place, which is a pip, the smallest movement in the value of 2 currencies. So that's basically what a pip is. The smallest is usually used to express the change in value between 2 currencies. So basically the smallest value change between 2 currencies is what you call a pip, and it's the 4th decimal place for most currency pairs. But you have exceptional pairs like USD Japan, where it will be the 2nd decimal place. So that's what a pip is. And just to give you a view, more details, this is something that I picked from Baby Pips. If you're a complete beginner, I'll actually also encourage you to go to Baby Pips and go through their beginner courses. They're actually very good for complete beginners in the forex market. So how do you read a price chart? Now that you've understood this is a pip, how do you read movement in price here? And I would like to take you through this particular image. We have a quote here given as 1.15382. Remember I mentioned that the 4th decimal place is what you call a pip. So assuming this particular quote increases by 1 pip. If it increases by 1 pip, then it means the price will be 1.5392. So it increases by 1 pip. Remember, the pip is the smallest value change between 2 currencies, and the pip value is the 4th decimal place. So in this particular currency quote, we have the 4th decimal place has been 8. So if the price change increases by 1 pip, then the new price will be 1.1539. If it increases by 10 pips, then ideally the 3rd decimal place is affected. So the 4th decimal place is usually quoted in like ones, then the 3rd decimal place is quoted in tens, the 2nd decimal place is quoted in hundreds, and the 1st decimal place is quoted in thousands. So if a currency pair moves by 10 pips, just to use this quote as an example, 1.1538, if the currency increases by 10 pips, then the new price will be 1.15482. If you get the drift here, if it increases by 100 pips, the new price will be 1.16382. If it increases by 1000 pips, the new price will be 1.25382. So that's how you read movement in That's how you read movement in an FX chart. Just to give you that 1.3, 1.5, 3, 8, 2. If you increase it by 1 pip, it means you are adding +1 on the fourth decimal place. So it will be 1.15392. If it increases by 100 pips, then it means you are adding 100 pips from the second decimal place. So it will be 100, it will be 1.16382, and so on and so on. So that's how you read price movement. So if you want to know a price moved by how many pips, and this applies to either direction, upwards or downwards. So that's how you read movement in FX. Basically the value change between two currencies. It will be in pips, and you start counting from the fourth decimal place. The fourth decimal place will be in ones, the third will be in tens, the second will be in hundreds, and the first decimal place will be in thousands. So I hope that's so let us look at quote versus bid. When you open your forex charts through whatever platform you use, whether it's MetaTrader, your broker platform, or you're using TradingView, you'll most always see these, a price quote screen. They look like buttons where you can actually just buy and sell. So forex is usually quoted in bid and ask prices, and the bid is a price at which you as a trader you can sell currency at, and the ask price is a price at which a trader can buy currency at. Sorry, let me repeat that. The bid price is a price at which you can sell currency at. Yeah, I hope that's clear. And the ask price is a price at which you can buy currency at. And the difference between the two is the spread or the transaction cost. If you look at this particular quote for the euro dollar, where it is 1.1403, and the buy, which is basically the ask, at 1.1404, there's a difference of it's saying 0.6 pips. Yeah, you see the spread is 0.6 pips. So this is basically what the broker earns from allowing you to make that particular transaction. So in all forex charts, whatever you open, there'll always be a bid and an ask price, and depending on the account type, this spread can be high or it can be low. We have accounts where this spread can even be as high as 2 pips. For this one, I see it's 0.6 pips. For some, it might be even 0 pips, but there the broker probably makes a commission from the lot sizes that are traded by the retail trader. So this is how prices are usually quoted in your FX broker platform. You'll see a bid and an ask price. And just to recap, the bid is a price at which you sell currency at, and the ask is a price at which you buy currency at. Hope that's clear. Lot sizes. So what exactly is lot sizes? In forex, we don't do fractional, how do I put it? We don't do single unit of currency trades. Yeah, trades are done in lot sizes, and lot size is basically it measures a transaction amount. And in forex we have the major lot sizes that we have, actually 3. We have a standard, we have a mini lot, and we have a micro lot. And when you're placing an order on the broker platform, you place your order in sizes, and these sizes are called lots. A standard lot in forex is 100,000 of currencies. Yeah, and the reason why it's called a standard, because this is the amount that is considered the norm among professional traders. Now, if you don't have the capital to actually open a standard account, your broker will probably have options such as a mini lot and a micro lot. Mini lots are not so common. I've seen in most brokers, I see it's either a standard lot or a micro lot. So a standard lot, as I said, is 100,000 units of currency. A mini lot will be 10,000 units of currency, and a micro lot is 1,000 units of currencies. If you're beginning your forex journey, my advice to you will be open a micro account, especially if you're in these sides of the sub-Saharan East Africa, where access to capital is quite challenging unless you are doing a pro farm challenge. I'd advise you to start with 1,000 with a micro lot. A micro lot allows you to place 1,000 units of currencies per trade, and it's suitable for someone who has low capital. Because it reduces your minimum deposit amounts. It helps you to do proper position sizing, especially if you're a trader who takes if you take partial profits and you have low capital. With a micro lot, you're able to plan your partial profits well. But if you have low capital and you force yourself to go do a standard account, you might find there's some positions you may not even be able to take because the broker will not allow, because you may not even meet the margin requirements, you may not meet the deposit requirement to make that particular trade. So if you are new to trading, open a micro lot. So a micro lot allows you to place a trade even when you have $1,000 in your account. But it'll be difficult to place a trade when you have $1,000 and you're studying a standard account. It is possible because there's a concept of leverage which I'll be talking about in my coming videos, but you'll be doing yourself a disjustice as a beginner trader because risk management is really key. With that, if you open a standard account and you have low capital, it will force you to take a lot of risk, which is not good in your beginner trading journey. I want you to start this journey the right way. So if you're in Kenya, please open a micro lot account unless you meet the minimum for that particular lot size. Like, do you have $100,000 to open to open a standard account? No. Actually, if you have less than $10,000, less than $15,000, there's no point of opening a standard account. A micro lot will serve you better to allow you to take partial profits well, and you're able to manage your trades well. The only downside of such account, the spreads will be higher. But if you are a swing trader or a position trader, that will not affect you much. That only affects scalpers and day traders. So if you're a swing trader, just go for a micro lot account. The spreads won't hurt you much because you'll be trading off the higher time frame. Also do have another type of lot size called a nano lot. These ones I don't think I've ever seen a broker. I've never seen a broker offer a nano lot. So these ones I don't think they really exist in today's markets. For today's markets, I mainly see standard account, and micro lot. So you can't trade a single unit of a currency like I'm buying Euro USD and I buy $1 or buy €1. No, you have to buy it in lot sizes. So that it makes sense for the market that way from a supply and demand point of view. And it also affects price delivery, the final price delivery that you see in your charts. Because the big traders, the big boys, the hedge funds, institutional traders who are well funded, they trade in current units of currencies above 100,000. And just to make it easier for you to even actually get a feel in your trade, you get most forex brokers, actually all of them, when you're doing forex, you have to trade it from a lot size point of view. I'll be talking more about lot sizes and leverage in my coming video, just to show you how to calculate lot size and margin and the deposit required to actually meet a particular trade. So for now, just introducing you to the concept of a lot. And to summarize, a lot is a unit measuring a transaction amount, and all orders you place on a broker platform will be placed in sizes that are called lots. And remember, the standard lot or standard size of a trade in the forex market is actually 100,000 units of currencies. And this is because this is considered the norm among professional traders. But you do have options that allow you to have lower deposits in your account. This is the micro lot and the mini lot. So today is just an introduction session, and I hope that's clear. So how do you calculate pip value? Remember, I showed you what is a pip. I showed you how to calculate the value, the pip value movement between two currencies. But remember, we have different currencies. Different currencies are quoted in different pairs, different base currencies. So each pip movement has a value. It can be in dollars. So if you're trading a currency whose quote is dollar, it's easier. Yeah. So if you're trading a standard account, let me just give you the basics. If you're trading a standard account, the pip value of each movement will be $10. So if you're trading a standard account, if your currency moves by 1 pip, that pip movement will be $10. If you're trading a micro account, each pip movement will be $0.1. If you're trading a mini account, each pip movement would be $1. So how am I arriving at these figures of $10, $1, $0.1? Let me take you back to the beginning. Remember I said the pip value is the 4th decimal place, yeah, and the 4th decimal place, you see it here, is 0.001. So that's the 4th decimal place. And remember I said that in forex we trade in lot sizes. Each order you make will be in a lot size. So assuming you're trading a standard account, if you're trading a standard account, remember I said a standard account, each lot size, one full lot size is 100,000. So you have 100,000, then you multiply that by 0.001. That gives you $10. So if you're trading, your account is in USD, and you're trading a currency that has a quote in USD. What do I mean by a quote? Pairs like Euro USD, Audi USD, Pound USD, New Zealand USD. You notice a trend, yeah? USD is actually the second part of that particular currency, Pound USD. So it means the pound is quoted in terms of USD. How many dollars do you need to buy a pound? Euro USD. How many dollars do you need to buy euro to afford 1 euro? Yeah, so if a currency is quoted in terms of USD, so it's easier. You don't even need to calculate it. It's just straightforward. For a standard account, each pip movement will be $10. For a mini account, each movement will be $1. And for micro account, each movement will be $0.1. And for each, what I'm doing basically is, let me just grab a pen tool and show you. For a standard account, which is $100,000 per lot, I'm multiplying by 0.0001, and that is giving me $10 per pip. For a mini account, I'm taking 10,000 and I'm multiplying that by same 0.0001, and I'm getting 1. For a micro account, I'm taking 1,000, the full lot size for micro account, and I'm multiplying that by 0.0001, and I'm getting 0.1. So in a standard account, each pip movement is worth $10. So if you have a standard account and you trade the euro dollar and it moves by 10 pips, assuming you traded full lot size, you'll have made 1, which represent 1 full lot size, times the value of each pip, which is $10, and it moved by 10 pips. So in a standard account, you'll have made $100 for every 10 pip movement. In a mini account, assuming you traded a full lot size, so it's 1, each pip movement is $1, and you've made the same 10 pips, you make $10 in that 10 pip movement. For a micro account, assuming you trade the full lot size, and each pip movement value is 0.1, and you've made 10 pips, it means your profit on that trade will be $1. So you can see the scales here. Being underfunded is one of the biggest downsides you can ever face in your journey as a trader, and I hope this shows you how serious it is, yeah, and the importance of always seeking capital. Because imagine you have 3 traders. One can afford a standard account, another one can afford a $10,000 account, another one has a $1,000 account. All these 3 traders have traded full lot size. The same trade, same parameters, same take profit, same stop loss, but one trader is making $100 in that same trade, another one is making $10, another one is just making $1. Capital, my guys. Capital, capital, capital. when you start your trading journey, please look for capital. If you have a small account, don't lose hope. You can always grow it. You also have alternatives. You have prop firms that actually fund traders. You can go through an evaluation stage and be funded, but seek capital. If you still in this level of $1,000, it's not bad. You can always grow by, if let's say you have a trading strategy that is actually working, you can always be depositing money in your account and just let it grow, probably reach to a level where it is $10,000. But for a beginner, I remember there's a time we had a session with Linda Rashki. It was organized by one Rufus Kamau of FX Pesa. Back then, you're still in Scope Markets. So he brought on Linda Rashki. Linda Rashki is actually one of the market wizards, the famous market wizard books. She's featured there. She told us that for our recommendation, the minimum trading capital to start with should be $15,000. Not everyone in Kenya can afford $15,000. So just start from where you are. My recommendation will be minimum start with $1,000. And if you're starting with $1,000, just go for a mini account. Start here. Yeah, start here and focus on consistency. Focus on the journey, not the ending. Just focus on the journey and you get there. You will eventually get to levels where you can do this and this. If you want to get there quicker, we have pro firms that actually fund and traders. You can do an evaluation. Just go online and do your research. I don't want to recommend any. Just go online, do your research. You'll see pro firms that fund traders, and you can usually get capital starting from $5,000 onwards. Some people even have funded up to $400,000. This is a lot coming from Kenya. You have imagine you funded $400,000 in capital. That's a lot of money. You'll be earning close to $600,000 per month. Let's say you have a strategy that gives you 1% to 2% per month. You're well on your journey to financial freedom, but I'll be discussing that and more in my coming videos. For today, I just want to give you an introduction, and that's how you do PEEP value for USD quoted pairs. Now, assuming you have a currency that is not quoted in USD, how do you calculate PEEP value? How will you know how much am I gaining for every PEEP movement in this particular currency? And I have an example here. I got this from Baby Pips. So assuming you have a USD CAD trade, so this currency is quoted in CAD, Canadian dollar. So you have a 15,000 trade involving the USD CAD, and the pair closes at 1.3050 after it has gained 50 pips. So how do you calculate your profit? This will be different from the example we just checked here, because remember in the previous example the currency was quoted in USD. Here the currency is quoted in CAD. So how do you calculate the PEEP movement? It will no longer be 10, it will no longer be the 10 and the 1, the 0.1. So it will be different. So for this particular trade, you take your trading capital, 50,000, multiply by 0.001, get the value of 1 PEEP in Canadian dollars. So for this particular trade, it was a 50,000 trade, and I multiply it by this 0.001. By now you know I'm multiplying by that. I get that for each PEEP movement, it's actually 5 Canadian dollars. Each PEEP movement is 5 Canadian dollars. So that's how you'd measure your profit when you're trading. When you have a trade like the USD CAD in place or the USD Swiss in place, you just take your trading, how much money you risked in that particular trade, multiply it by 0.001, get the value of 1 PEEP in terms of the quote currency. So if you want to get the value of 1 PEEP in terms of the base currency, the base currency here is being the USD. So this is the base, usually the first currency quoted, and this is the quote, actually the second one quoted. Yeah. So you will take, so how do you calculate the number of base currency, basically USD per PEEP? I'll basically convert these 5 Canadian dollars per PEEP to USD. Remember the conversion, the quote currency is 1.3050. Yeah. So for me to get USD, I have to divide that $5 Canadian dollars and divide that by 1.3050. For me to get 3.83 3.83. So even the currency that you trade determines how much profit you get per trade. You can see the differences very clearly. Yeah. So different currencies will give you different profits per pip, depending on the conversion rates and the market dynamics that are happening around that particular trading day or trading week or trading month. So for this particular example, USD CAD, you find that based on the quote currency, each pip movement is 5 Canadian dollars. But based on the base currency, USD, each pip movement is 3.83. Yeah. So in this trade, say we assume that we gained 50 pips in profit. So how much profit is that? In money terms, real dollar terms, it's 50 times 3.83. And that gives you the 191.5. So that's how you calculate. If I'm taking a trade, I want to know how much will I make. Because let's say I made a prediction, this currency is going up 50 pips. So how much will I make if it goes up 50 pips? So you have to do this pip value conversion. You basically take the amount of money you risked in that trade, multiply it by, remember the fourth decimal rule for 1 pip, 0.001, to get the value of 1 pip in the quote currency terms. Then you can convert that quote currency terms to the base currency, assuming your account is in USD, because most accounts have to be funded in one particular currency. Majorly people I see use USD. Let's say my account is in USD, so I've taken a USD card, so I have to convert it to USD to see how it will affect my ultimate P&L. So I've converted these 5 Canadian dollar per pip to USD, and it has given me 3.83. So and I was anticipating to gain 50 pips from this particular trade, and that's how I've been able to get the 191.50 in USD profit. So that's how you calculate pip value. So I hope you've understood the journey all the way from the meaning of a pip, the fourth decimal rule, the understanding of lot sizes, and now how to calculate pip value. I'll be deep diving into these concepts in my next 2 videos. I'll be taking you through how to calculate leverage, margin, and do a position size. Because it's very rare in forex you do full lot sizes in a trade. I trade one standard lot, I trade one micro lot, I trade one mini lot. Usually you see trades taken in fractionals, 0.4 lots time or 0.6 lots. So in my next videos I'll be showing you how to arrive at this. So today I just want to take you to the beginner concepts, just to understand the basics. Then finally, when you start the charting, when you start with the anatomy of a chart, it will be easier now to flow with what is price action. So that marks the end of today's video. I hope it will be helpful to you. If something is not clear, just reach out, write in the comments, and I'll respond to you. I'll make my best efforts to respond to you. But for now, thank you. Enjoy your week. For those who trade, catch some pips. For those who are soon to be profitable, I pray that you're profitable. And for the beginners, I pray that you become consistent and start off at the right footing. Knowledge. Get the right knowledge. And I'm here to help you with that. Thank you. See you next time.